During the 2008, end of 2008, I said the United States first into recession, last out. Always said the US would be last out of the recession. Always said that the United States no longer leads the global economic cycle. It hasn't for some time, it's just the waters have been muddied. The United States' strong dollar policy has for many years now been the orderly decline of the US dollar policy. The American authorities can't come out and say we're happy with the US dollar to decline, but they want it to. In the back room, they've wanted to for a long time. They say they have a strong dollar policy, but they never back it with any money because they want an orderly decline of the US dollar. Imagine if they came out and said we're okay with the US dollar falling. There'd be a massive dislocation to markets. So that isn't going to happen. But the US dollar will continue to weaken. Why I bring it up is it's one of the major reasons why the US economy is recovering now, why US manufacturing has been strong for a good 2 years now, and will continue to be. You know, they're running 3 shifts, 24-hour shifts now in Detroit to manufacture motor vehicles. Manufacturing in the United States is well on the rebound. So the 2 things that were going to save the US economy, if you like, out of the GFC were a weaker currency and the rest of the world rescuing the United States. The rest of the world really is Asia and Latin America. I have 2 terms. New First World. New First World is Asia and Latin America. Old First World, I'm sure you can figure it out, is Europe and the United States. Europe and the United States are the old First World. They are the mature capitalist systems where profit margins have been squeezed, where they're overloaded with regulation and they're seizing up, but they will continue to click along. I've said that if the United States flatlines at 0.0% growth, the rest of the world will have a party. If the United States grows at 3%, and my forecast for this year is 3.4, the rest of the world will have an even bigger party. But the point is, the rest of the world no longer needs the United States. Everyone talks about China's vulnerable to the slowdown in Europe and the United States. Less than half of China alone, less than half of China's exports go to Europe and the United States combined. Less than half. Something happened about 10 years ago. I coined the phrase or the term intra-regional trade. The countries of Asia and Latin America discovered they could make just as much money doing business with each other, trading with each other. They all reached critical mass. Countries down the eastern seaboard of Asia used to compete to export to the United States. Now they compete to do trade amongst each other or to export to Latin America. The fastest growing shipping lines are East Asian short routes between East Asian countries and Brazil, China. They're the 2 fastest growing shipping lines in the world. And the big shipping companies are building ships, purpose-built ships for those 2 projects. It's not about how Asia can export to Europe or the United States. Japan's biggest export market, China. It's not the United States anymore. Brazil now funds the US deficit. It's a very different world. And it's not a very different world that's going to come about. It's a very different world that's been in place for several years now. Okay? So in terms of understanding where the global economy is going, the first thing is intra-regional trade. That the countries of the new first world, I don't use the term emerging, you know, it's something that people in New York and London like to use. But the new first world of Asia and Latin America is a very vibrant intra-regional trading zone, 2 zones that are learning to now trade with each other. That's where global growth is coming from and has been for some time. Just quickly back to Europe though. World's largest economy, plenty of money to fund the current sovereign debt issues. They've done an awful lot, and you never hear anyone say what a great job the leaders of Europe have done to solve the problem of the European sovereign debt crisis. They've done a great job. They've pulled it all together. They created short-term solutions, medium-term solutions, long-term solutions. What's Europe going to be like for the next 1 to 3 decades? It's going to be the most fiscally responsible economic zone in the world. I mean, one thing's for sure, it's going to be a lot more fiscally responsible than the United States. Okay? Europe last year, corporate profits in Europe grew 10%. The year before, corporate profits in Europe grew 10%. The forecast for the next year for corporate profits in Europe, 10%. Unemployment in Europe across the whole Eurozone as a whole is over 10%, 10.4, 10.7. Not dissimilar to where the United States was. But that was also, I also argued the United States would recover with 10 and 9% unemployment, as it has over the last 2 years. Reasonably good economic growth. In fact, the latest growth numbers out of the United States are better than Australia's, even with a resources boom. Regardless of the unemployment level. Because when unemployment in the United States was at 9%, economic growth in the United States was not about the 9% of people unemployed. It was about the 91% of people with their jobs. And what you had in the early part of the GFC was massive uncertainty and job insecurity. And that led to a withdrawal of consumers from the market, property market dropping. But the longer those people, that 91% had their jobs, continued to have their jobs, the longer they started to see that on Main Street things were picking up and their company was starting to make good profits. I think US corporations, I think profits were up 13 or 14% last year. People are making money. It was about those who had their jobs becoming confident about keeping those jobs. And once they became confident they would keep their jobs, they went out and started spending again. And that's why the big upsurge we had in consumption over the last 12 months in the United States was a surprise to most people because unemployment stayed high, yet how come consumer spending was going up? It was because the people with jobs were now confident. That will remain the case. Unemployment in the United States will stay stubbornly high, despite some encouraging numbers. But the economy itself, GDP, prosperity, and wealth creation will continue to grow at above 3%. In Europe, I think we're going to see 2% GDP this year. You know, we've got an economy that really is feeding now off the strong growth of the new first world, Asia and Latin America. The demand for European goods is skyrocketing. Even with a strong euro, German exports continue to go through the roof, as do exports from France and Italy. By the way, Italy was never going to be another Greece. I was in Rome giving a speech just 6 weeks before Berlusconi resigned, and I was told at that time that Berlusconi would resign in about 6 weeks. Everyone knew. The people wanted fiscal responsibility. The parliament wanted fiscal responsibility. The only problem was Berlusconi. Whereas in Greece, it was the other way around. The leadership wanted fiscal responsibility, but the parliament was confused and the people certainly didn't want it. Okay, so it was a real struggle in Greece, but it was never going to be a struggle in Italy. And Italy's already doing well. In fact, I told clients to buy Italian bonds that week when Italy was supposed to be falling off a cliff. And they've done very well out of that. My point is I'm trying again and again and again to counter all the fierce negatives you've seen or heard to explain that there's common sense reasons for being upbeat. So Europe, 10% unemployment, but that's probably peaking now. Corporate profits, very strong. Corporate balance sheets, very strong. Sovereign debt, well funded, and interest rate levels are not really a burden at all to those countries and are comparable with Australia's interest rates. Moving across to the United States, I think we're going to continue to see strong manufacturing. Service sector will suffer. I mean, two things that aren't going to come back quickly in the United States are the housing sector, or three things: housing sector, unemployment, and financial sector. The financial sector itself is still, if you like, in a recession or depression, which is why the people who write research out of Wall Street tend to be a little bit negative, because they see people around them losing jobs. They also still think they're masters of the universe, and if the finance sector and all the investment banks are doing it tough, that's bad for America. What's actually happening is Main Street's forgetting Wall Street and just getting on with the job of making money. And that's going to continue to be the case. But the research you're getting out of the US is driven by these people who see job losses around them. They see their bonus being halved, and they think that if it's tough for them, it'll be tough for the rest of the world. And they still somehow think that the United States leads the global economic cycle, which it doesn't. Okay? Also, they hate Europe, so they're always going to do negative press on Europe. But I think you're going to have a strong Europe this year, you're going to have a strong United States. I haven't spent much time on Latin America and Asia because it's a no-brainer. These areas are robust economic regions in their own right, and they are not dependent on the United States or Europe for their growth. Remember those ABC programs, documentaries in the GFC, all that footage of those completely empty manufacturing factories and everything? They were all in the export sector. One particular region of China that was designated for export manufacturing. At the same time, the rest of China was still booming. That's why Chinese GDP only dropped to 6.7% for one quarter and then shot straight back up. Because people panicked in China and then realised they were okay. China closed steel mills and within 3 weeks had to reopen them because they were running out of steel. So if you like, the whole world reacted to this negative press, including China and the GFC, but the real demand of the real economy of Main Street around the world is a lot stronger than people in New York, Wall Street would have us believe. I mentioned intra-regional trade. There's another term I have, it's called bottom-up economic revolution. Global growth is now driven by all these people realising that they can get on and improve the lot of themselves as an individual, their family and their community. And they can do it without caring really what the sovereign debt issue is for Greece. They now are empowered to find capital, resources and technology very quickly, all of their own, and get on with improving their lot. And if you like, that bottom-up economic revolutionary process combined with intra-regional trade are powerful economic forces that mean this current economic growth that we're seeing is likely to accelerate. It's already strong, it's going to get stronger. Global growth this year will probably be 5.4%. 5.2 is my forecast this year. I just use China as an example. Chinese authorities have not orchestrated Chinese economic miracle. What Chinese economic managers have had to do is cope with this wave, massive wave, of people moving from agrarian to white collar, from west to east, hundreds of millions of them, how to manage that economic boom, just direct it. And that's all they've been able to do. They didn't create it, but now they have to manage it. China is the best run economic system in the world. It's the best capitalist system in the world. And they have a nuance about managing monetary policy that we don't have in this country, or most countries in the West don't have. And I really would strongly suggest to you that China is going to continue to be a major powerhouse. So the outlook for demand for Australian resources, at least, is tremendous. So if we can just get over having a central bank with a learning disability, and a government that wants to overtax at every opportunity, we're going to see a very prosperous Australia as well. But regardless of all that, when it comes down to the stock market, people are underinvested. The economic reality is way ahead of where the market is. The market has to catch up. People don't want to believe it. The bears don't want to believe it, but they're starting to crack. And once things start to turn and these global fund managers realise they have to compete with each other to get long and leverage into various global equity markets, it will be a very aggressive bull market phase. And I really do think that the surprise will definitely be to the upside. We've already seen it through the end of last year and into the early part of this year, quite good rallies in markets that no one thought would be the case. Remember December last year, all the media headlines, New Year's Day, stories about how Europe was going to disintegrate, how there's going to be a great global contagion, a global recession, massive downwave in stock markets. And all we've seen is things constantly get better wherever you look. And I think that will remain the main state of play for the rest of this year.